we're on a multiple time frame, although we are using renko. We're using renko and time charts here. And we've had the congestion phase, we've had the volatility, we had the volatility trigger here. But now what we're doing is we're looking at the renko charts and using them as another charting mechanism, but used in a multiple way. So yes, we've got multiple time frames below, but up above we've got multiple renko charts, and it's a great way to blend the both, not only so you can apply volume price analysis to straightforward price action below here, but you've also got the advantage of trading on a non-time-based chart, which delivers momentum, which a time-based chart doesn't. And the other beauty of renko is it does smooth out a lot of the congested price action and delivers a more consistent trend, if you will, purely by virtue of using bricks as opposed to candles. But we need candles to give us the all-important view on VPA. Now, what I was doing when I had the microphone switched off, I was just literally updating these to the correct time frame. Below, we've got 15 seconds, so let's just check that one out again. Just click on that. And what it does, the optimizer, it delivers the optimal brick size. And what it's saying now is we need an 8-point brick size. So if we just click on that, this is now optimized for 8 points of YM, which is $40 a brick. We'll do the same over here. This is 30 seconds. So we click on 30 seconds. The optimizer thinks about it for a moment and says, yep, okay, for that size, for that particular time frame, you want to be trading on a 12 brick size. So in other words, 12 points. So each of those is worth $60. And then we go over onto our 1 minute time frame. Wait a second for that to load up, and that's going to deliver 18. So if we want to trade off that sort of time horizon, then we're going to be needing a brick size of 18. In other words, 90 bucks a brick. So each of these bricks here is worth 90. And what I was saying was basically the rule of thumb is the faster the time frame, then the smaller will be the brick size. As you move down the slower time frames, then the brick size will get progressively larger. Now you can obviously set it in the optimizer yourself. You can choose a brick size. We always use the optimize because that's what the indicator was designed for, to deliver the optimal setting for that particular contract at that particular time of day. Whether you're trading whether you're trading index futures, whether you're trading commodities, gold, oil, whether you're trading soft commodities, currency futures, it doesn't matter. It works on all of them and it will deliver the correct notation, the correct annotation for that particular contract. In other words, it will deliver up here in terms of dollars per ounce or bushels or whatever it is, barrels per dollar, whatever. So you just set it on the contract you're trading and off you go. The two indicators we always have on here, or certainly three, but certainly two, are the trend dots, which work very close to the market. You can see here, they've transitioned into bullish. We've reversed a little bit. We've gone gray. We've gone into red indeed. But then we come out the other side, we get a red. Now we're back into blue. We're staying in blue. Now, if you look at the trend monitor, it hasn't flickered at all. It did through this phase here because this was an extensive phase of congestion. But as we come out the other side, it's in solid blue. The same over here on the 15-second, the 8-point brick size. So we've got blue here and we've got blue here. So basically, it's keeping us in. It's helping to keep us in through these phases of price action. The trend dots will always change first because they are very close to the price action. And when you're in an uptrend, what you're looking for is the dots below, like we have here. They're pushing up, pushing up, pushing up. Then you get these transitional phases. Now, if this is going to go into a bearish phase, they're going to sit on top of the bricks and push down all the time. So they're applying pressure from the bottom. So they're either applying pressure from the bottom or they're applying support from underneath. And that's what you're looking for the whole time. But it's using the two in combination. Then in addition on here, we've also got the accumulation distribution indicator, which are highlighted on the time-based charts. It works exactly the same way on renko. You get these very strong regions, and once you break through this, something like this was 7. We've got a strong support platform down here. We've got a potential resistance which became support. We had resistance which became support. We've broken through this region up here. This was pretty strong too. So we're pushing on, we're pushing on. We've got all these levels below. We've got the trend dots below, and we've got the trend monitor helping to keep us in all the time. And that's the beauty of the renko. It smooths out a lot of the price action, used in multiple ways. In this way, it's a very, very powerful tool. And of course, you can apply VPA methodology below and trade off a non-time based chart above. I'm just going to pass back to Anna at that point.